Hey guys, welcome back to another video on TradingCam, and in this video I'll be introducing this Fibonacci scalping strategy that uses the Fibonacci retracement tool together with support and resistance. And before we start this video, make sure to let me know what you guys want to see in my next video and just comment it down below. So I'm going to introduce this strategy to you guys today. So it basically capitalizes on momentum and trend trading, waiting for the retracement and buying of the pullbacks, using the Fibonacci tool and the support and resistance. So without further ado, let's start with how to take long positions. So in order for you to take long positions, you'll be first needing to identify an area of resistance that previously was identified. So resistance is basically the area whereby price had previously been sold and rejected multiple times. So as you can see here, we can identify clearly here an area of resistance. So draw this area. I'm going to make it red to look like it's resistance. So what you see here is that price rejected this area multiple times. So we see it got rejected one time, two times. There's a bunch of times here. So I'm going to count it as 2 times here. 1 time, 2 times, 3 times and 4 times. So this area of resistance basically acts as an area of supply whereby there's a lot of sellers. So whenever price reaches this area, it will go back down because it's area where a lot of sellers are. So the next step for you, after you identify the area of resistance, you want to wait for price to be able to break through the area of resistance, which is what we have here. So let's say we look on the replay mode. You see that price recently rejected this area, rejected again. Now you want to wait for price to break through the area. Here you got rejected again. Wait for price to break through, which is what we have here. So after it breaks through, you want to identify the new higher high, which is right here. You can see the price break through, it made a new higher high, and you want to identify the previous lower low, which is what we have right here. Next up, you want to use the Fibonacci tool. So you can go to the third one on the left of the TradingView app, click on Fibonacci retracement, draw it from the bottom of the lower low to the higher high. And the next step will be to identify the level which aligns with the same area of resistance. So in this case here, the 0.5 level is the same zone as the area of resistance, and what you want to do is you want to place a buy limit order at the same area of resistance and the 0.5 Fibonacci line. For this, place a stop loss below the 618 level, or you can place it above the recent lower low, and you can aim for 1.5:1 or even 2:1. Next up, just wait for price to retrace back to your entry level. Make sure that when you have done so, the price, you have already set your take profit and stop loss. So you can see it retraces back to this area. We are still in the trade. Let's let it play out. You can see it rejects and goes up. And there you have your winning trade right there. So that is how you take long positions. So in this case, you'll be only wanting to wait for price to retrace back to the same area of resistance, and only if the 0.5 level or the 0.618 level is aligned with the area of resistance, you would take it. So let's say if it's the 0.382 level, you would not take that position. You only want to take it if the 618 level or it's the 0.5 level aligned together with the area of resistance, then you will set a buy limit order. So now let's transition to taking a sell order. Okay, so in order to take short positions, the rules is actually exactly the same as taking long positions, except that you just reverse the rules. So the first rule would be to identify an area of support where there previously was. So in this case here, you can see that there's this area where price previously support at. So I'm going to draw the area right here. We're going to make it green in color to show that it's an area of support. So let's zoom in. So you can see that in this area of support is basically where there is a lot of buyers. So you see price rejected, came back to this area, rejected, came back to this area, rejected, and came back to this area right here on this candle as well and rejected. So these 3 areas are the areas where the price has been rejected and there's a lot of demand in the area where buyers are. So whenever price reaches this area, there will be buyers and it will push the price up. So next up, you want to wait for price to break through an area of support. So let's head back to the replay mode to show you guys what I mean by that. So we previously already have identified this area of support. We wait for it to break the area of support. So in this case here, it's still being rejected. You want to wait for price to break through and make a lower low. So let's wait for it, and you can see here price has made a lower low on this candle right here. You want to place your Fibonacci retracement from the previous higher high to the lower low and see which level aligns with the area of support. So in this case, this 618 level aligns perfectly with the area of support. So I'm going to place my entry level right there where your sell limit order should be. So basically you want to place a limit order at the same area of support and the 0.618 level so that you can have a sell order right there. You want to place a stop loss above the 0.6786 level and aim for 2:1 or 1.5:1 risk to reward ratio. So in this case here, we already have been tagged in on this trade. It retraced back to the same level and has been tagged in, and now we're going to wait for the trade to play out. So there you can see that immediately after it reaches this zone, it will retrace back, and it pushed back down, and we have another winning trade right there. So as comparing between the 0.5 and 0.618 level, the 0.618 level is a stronger level compared to 0.5. So what do I mean by that? So basically whenever price reaches the 0.618 level, there is a higher chance that it's going to reject instead of the 0.5 level. But obviously the 0.5 level has more trades and you will still have a higher it's still profitable, so there's no reason for you to guys take those trades. But if you guys want to have a higher win rate, I would suggest that you guys use the 0.618 level. And if you guys want to do this on the other time frames, it works as well, and you guys can just test out the strategy for yourself. So let me drag to you guys. So as you guys can see, there's a lot of uses for the Fibonacci level, and draw this from the bottom of this lower low to the new higher high, and you can see that at the 0.5 level it basically rejected at that area, and you can buy at the 0.5 area as well. But if you guys are able to pair this strategy together with using support and resistance and being able to capitalize on it, there is a lot of money that can be made using this strategy. But obviously using these tools, you are not using any indicators, which I find that it is actually quite reliable. So make sure you guys just test this strategy out and let me know how it works for you guys. So thank you guys for watching. Check out my other videos as well and let me know how it goes with this strategy. See you all in my next video, and goodbye guys.